Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here on January 13th, 2020 with a daily Forex market analysis for you, and we're going to take a look at all the major currency cross rates and see how they're shaping up to start the week off. Before we get into that, we want to just pull up our Forex Trading Unlocked disclaimer just to remind you that this webinar is for illustrative purposes only. With that, we'll go to our live screen, and we have the Forex-Trading-Unlocked.com website, and we pulled up, and we have the workstation page, which you can access from our top menu bar. We have that pulled up, and excuse me, let's see, we have for Canada a couple of numbers coming out, for Japan a couple of numbers coming out, but pretty much everything is done for today. Tomorrow we have CPI for the US dollar, which is a big number always, and then let's see, what do we have later on in the week? We have PPI for the UK coming out, and also industrial production for the EU as well. And let's see, we have a bunch of German numbers coming out on the 16th, and that is, and then we also have import numbers and retail sales coming out for the US dollar at the end of the week as well. Okay, so we take a look at this first chart now. All right, so let's get rid of this volume here, and we can get rid of the news section here. So we have the Euro US dollar chart up here first, and real quick, we just want to remind you what happened with the dollar index last week. Now, the dollar index has been a bear for quite some time, but has started the year off with a nice little rally. As you can see, that it made a higher move high on Friday and is pressing up against some strong resistance. Most likely the trend has been down. This is a corrective rally, and with the way it ended on Friday and the way it's shaping up right now, it looks like the dollar index is ready to start to fall back towards support. Now, if I'm down in the Middle East, and the oil markets and other things seem to be at least somewhat subsiding, I think we're going to have another run at resistance for the major currency crosses versus the dollar. So first we're looking at the Euro US dollar here, and we're going to make this a little bit deeper, and we want to extend this to the right. There we go. Okay, so the overall trend for the Euro US dollar is a nice positive slope here, and it's not too radical of a trend either. So this is actually something that's easy to maintain. It's been in a corrective slide for the beginning part of this year as the dollar index had been gaining strength, and now we can see that it looks like both of them are starting to turn. Remember, the dollar index, if it was in a corrective rally, then it is going to be maintaining its bearish posture, which should help to lift the major core currencies such as the euro, the pound, the Swiss, and stuff like that. Now, the biggest thing you really have to take into account for the Euro US dollar coming up now is not just the numbers, but the fact that we have the Brexit date. So here we have this dark line here. Let me make it a little bit clearer for you. Okay, so this here, January 31st, is our Brexit date. So what does that mean? Where are we going to go? Well, let's say that this market has bottomed. I think that you are going to see a big wide range trade pretty much in this area right here. So we'll clear this out, make this a little bit easier for you to see. And there we go. Okay, so see this circle here? This is pretty much, I think, going to be your containment of a range trade literally for the next few weeks. There's no real reason to think that the Euro US dollar is going to have some major rally over the next couple weeks. I mean, anything can obviously happen. Let's make this a little bit easier with some, okay, so we have these red pivots here. This will make it a little bit easier to see. All right, there we go. Whoops. Okay, there we go. So here we have our $12.39 upside pivot, and we also have, let's raise this up just a tad right there, get that on the low. There we go. Okay, and then we have $10.84. So this is pretty much our containment for upside and downside levels. We have the upward sloping support line coming in here, so I think that this low right here that we just recently made is probably going to hold for a little while. Now, if this is our higher move low situation and it does form a nice base for us, that doesn't mean that we're really going to just keep on accelerating this rally and we're on a mission to go up towards 118, 120. Is it possible we could get up there? Absolutely, but the dollar index really needs to start to hammer support before that can happen. So like the dollar index has been in a corrective rally, even if we have a little weakness right now, that just puts us back into this area here, and we might start to see, especially as we get closer to January 31st, that the euro starts to settle into a range trade. So I would be very cautious being an aggressive bull here. I think that if you're a bear, as long as you are not long above $1.1239, you can look for some spots to pick, but I would wait. I would wait till you're up in front of this higher pivot before you start to get that aggressive, because then you may have a change. You might have a chance if you're a range trader. Otherwise, right now, I think that the smartest bet is to be in a bullish stance right now, and viewing this last slide as a corrective rally, and this low here around $1.1084 as your base. So if you were a Forex trader, you'd like to get long using this as your stops. Definitely anything below here would mean lower move lows, bearish sign, meaning you should not be long. So this is definitely your risk area. For futures traders, you want to adjust obviously against the cash, so you use your the last low excuse me, from 2 sessions ago in the futures, and that would be your risk level for that market as well. And your target side right now, we definitely are targeting this upper resistance level at $1.1239 and new highs. Fundamentally, we have this low down here. We've made a succession of higher move highs, higher move lows, stopping again once again recently and making a higher move low. And should this trend continue into our little ellipse here where we're looking to our target area, that helps to gain bullish momentum and maybe get a play for this $1.1239. But like I said, I don't think this is going to happen over a very long or short amount of time. Odds are, as we head into the middle of January this week, that we're going to start to settle into this area and maybe go sideways for the euro US dollar. So let's look at the pound US dollar, and this might give you a little bit more of a reference point as to what I'm saying here. So the pound US dollar is starting to show weakness, even in the wake of a weak dollar right now. This has to do with some of the news going on in the UK. So we are going to use these points right here as our major pivots. Let's use a different color here. Let's use the green here. This makes it a little bit easier to see. Okay, so these pivots right here, this being the major low you want to watch out for, this last higher move low. This is a key support level. So if we get a failure here, then that means what? Well, that means we'll set a high, a higher move low, then a lower move high, and then a lower move low, meaning we're changing trend. So it's really key to see whether or not this direction here is where we're going. So the let's see if we have a, let's get one right here too. All right, so these are our directional pivot points. Definitely this layer move or lower move high is a key pivot area. This would be $1.3289, and any rally above here targets $1.3513. This last higher move high. Now remember, the trend overall is bullish. Okay, so the trend is your friend. Don't try and pick a top or a bottom. It's too easy to just see some nice bearish pressure and be like, oh, I'm going to get in front of this. I'm picking a top. Now, could it be a top? Could we have a head and shoulders forming? This is kind of a stretched head and shoulders, but it is possible that this kind of formation is where we're at right now. It's kind of an ugly one, not exactly the cleanest head and shoulders, but we don't need to have a head and shoulders to confirm a bearish bias. So right now we've had a succession of higher move highs, higher move lows. This one here, right here, $1.3289 being our key last higher, lower move high. And now the question is, will we take out this $1.2905? Now this support line here, we just bobbled and touched on it today. It's holding. Let's see what happens today. If we fail here, and if we definitely get below this $1.2905 area, well, then we have a succession of lower move high, lower move lows. That indicates neutral to bearish tendencies. It doesn't mean this market's going to be an overall bear. Remember, it's been in an accelerated rally since the summertime. We've had a lot of upside movement. We're coming into Brexit as well. This market has gone sideways for most of the past couple of months. So Are we going to stretch this? I don't know. I think that you really have to look out for, like I said, that last major pivot there. Let's get this to be okay. So we have our green pivot line here from this last higher move low. A failure here will have us targeting this caramel here at $1.2758, but then we also have this long-term upward sloping blue line. This trend line seems to be pretty decent of a slope and has been holding this market together for a while. So if we come down to here, I think you're going to find it really, really hard to fall below here. The only reason we would fall between here is if there's a lot of negative stuff coming out between, I would say, the UK and the EU. Right now, things are not in a perfect world, but we know that come January 21st, January 31st, that Brexit is happening, and then they have until December of 2020 to haggle out the trade agreements. That's a whole nother issue, whether they get that done in time or not. We'll tackle that as that goes along. So to get a little more of a bearing on what's going on, we have the euro, which is somewhat stronger versus the dollar. We have the pound, it's lower. So the dollar index is a little mixed between its two major currencies. And then we have the US dollar Swiss. Well, this one looks a lot like what chart? Oh, the dollar index. That's right. We started off with that one, correct? So this one here is in an overall bear market. We've established a lower move low a couple of weeks ago, and now as of yesterday, we have made as of Friday, we made a lower move high. That would be this little spike right here. Is that the high for a long time? I don't know, but right now it is a potential lower move high, and we are definitely targeting the lows. Now the US dollar Swiss has been pretty much in tandem with the dollar index. So a lower US dollar Swiss pretty much predicates a weaker dollar index. Obviously, the pound being lower today keeps the dollar index from looking as severe to the downside as far as bearish momentum. But you have a positive euro, you have a positive Swiss franc. Those are two strong European currencies, giving indication that not only the week off is the dollar showing a little bit of support bashing and looking to fall apart a little bit, but it's also coming in line with our trend forecast, and also going with the theory that the current rally that had been going on in the dollar over the past 2 weeks since the beginning of the year started, and the corrections in the other currencies were corrective moves. That's what we're looking for to see, because usually we always want to stick with what? The trend. The trend is your friend. May be trite as an expression as there is in trading, but it couldn't be any more true, especially when it comes to currencies. So now let's go look at the US dollar JPY. Now this one, what a confusing currency this is, because the dollar is a bear and then the US dollar yen is a bull. So, and here we have the breakout today. We've been look at this low. In the past few sessions, we made a higher move low. We crashed through all this support. Market had been just grinding higher for a while, but then you know what, once again markets go in or go out like they go in. So we had this severe slide, and then we started to look like we wanted to bottom, and then look at this day. What a brutal spike low here. Came after this nice big rally, slammed all the way through support, made new lows, and came all the way back like a balloon underwater that day. I'll tell you what, there's a lot of traders that must have gotten chewed up on both the long and the short side on this move. Excuse me. But as the dollar does weaken, this is the one currency where you're going to look to find strength. Now, we don't have to worry about Brexit with this market, but you know what we do have to deal with, and it's coming up this week. In 2 days, we have the first phase of the U.S.-China trade deal, and it looks like it's going to be signed on the 15th. This is all positive for the Asian trade zone, and it also gives strength and credence to the U.S. dollar versus the Japanese yen, obviously. Now let's look at the Australian dollar, US dollar, and see what's going on with that market. Now remember that the US dollar yen cross is not the only one that's impacted by this China trade deal. As you can see, the Australian dollar, US dollar has been gaining some strength. Well, this currency, there's a reason why it is, because Australia stands to benefit with a deal with China being made with the US, because they have all their eggs in one basket and send most of their commodities to China. So a stronger China, which we already know was stronger this past year than expected, much more strong than expected. So that helps this market get a lift. So if you are a bull, I would say that you are on the right side. I would key off of this last higher move low. This was key support, and now we are looking for a challenge of the last swing high up here around 70 cents, around 70.33. So that's where we're looking for the Australian dollar, US dollar. Now let's look at the New Zealand US dollar. Here's another one in that trade zone. Now this one could be a little bit choppier. Overall, it's a bull, but this has been an aggressive bull for quite some time, bucking the dollar no matter what the dollar was doing. Obviously, it's had a little bit of a sell-off that's gone with the US dollar strength over the past couple weeks. Looks like it's starting to wane. This market is going to be a tough one. I would say that overall it's a bull. If you're in, keep your stops tight. If you're a bear, I'd be very, very careful pressing this, because even though it may start to take out support, I think you have to watch out for these last two swing higher move lows around 65.52 and 65.19. I think that if you get another slide somewhere in here, you'll find a nice little support band that'll hold you up. At that point, I think you will start to see, and you can see what I mean when we go by this trend here. So we can go by this slope here, but we can even go by this slope here. Overall, this market is in a fairly decent upward sloping trend, except it's been very radical to the upside in the month of December. So we're kind of digesting this. So just sideways to lower keeps us above this band, and we have this upward sloping blue line. So I think if you're an aggressive bull, you might take some heat. If you're a bear, I don't think you have much room to the downside. I'd be very, very cautious with any type of slide here. So let's look at the US dollar Canada and come back to our trade zone now that we've gone around the whole world. And as the US dollar starts to show signs of weakness, this, like the Swiss and a couple other markets, is showing that the US dollar is in a bear trend versus many of our especially lesser major currency crosses, which helps us to keep these trends intact. We are going to continue to view this current rally in the US dollar Canada as a corrective rally, with this last lower move high a couple sessions ago being our last swing point to the upside for a correction, and we'll use this high as our resistance. So if you're an aggressive bear, I would say being short against this in the cash or in the futures against this last high at $1.3105, or adjusted respectively for the futures, this would be your risk level to make another run at support. Also for options traders, these would be strike prices. You could look for credit spreads to sell, or to be selling binary option strikes around this pivot here of $1.3105. So if you are a bear, I would say use this pivot point here, and you can use many different trades in, especially since it's the beginning of the week. You're looking good for futures, options, binary options, and also obviously the Forex cash market. And then if we get especially going, since there's not that many numbers, but they're good economic numbers as far as the list of 10 major ones, but they're spaced out. So we have the beginning of the week and the end of the week, and they're spread out across the globe with no major expectations of swinging one way or the other. So they're pretty much probably going to come in line. So I wouldn't expect to see as much going on with the markets. The key thing to remember is that we have the January 15th deadline in 2 days for the U.S.-China Phase 1 of the tariff trade war agreements to be signed. And then we have on the 31st, which is so we have over the next 2 weeks a lot of reasons to go sideways over the next 2 days. That's why for a Monday you can see that we've made our moves, and we'll go back to the euro US dollar, and I want you to see what I mean by where we might start to see a tightening of the trade. So today we have an update in the euro. What is the low? The low today is $1.1111, and the high is $1.1136. Okay, well that's only what? That's only 25 pips. 25 pips to start your day on a Monday morning, where the market's already been open for quite some time now. It's been open for over 12 hours, and the European session is now winding down, and this is all the volatility we have heading into Brexit and the trade deal with China and everything else. So that's where I think this last swing low is a good aggressive spot for you bulls here. So for Forex cash, This would be a risk of $1.1084. And for strike prices for options traders, I'd look to sell some credit spreads below this last swing low. And as well as far as out of the money calls and stuff like that, I think you have a good chance at running at this 112.39 over the next 2 weeks. So for a weekly move, you're only looking at a rate with 25 to 40 pips a day range, 50 pips tops. Let's say we get a rally over the next 2-3 sessions. You're looking at, we're at $1.1130 right, or excuse me, $1.1130 right now. So yeah, to get up there a full dollar, that would be quite an aggressive move. But we could grind higher over the course of the next few sessions, especially going into Wednesday. But don't expect a lot of volatility, because unless the trade deal doesn't get signed with China, and unless there's some major news that comes out between the EU and the UK, which is very, very, very unlikely, because the EU can't stop it, and the UK's got the votes, it's going to happen. So until we get to that day, I think that's when we're going to get the pop afterwards, but we have to get through these dates. So we've had a nice swing trade over the holidays, folks. Not the normal thing for currency traders or market traders in general, but now we have a very sketchy January. Remember, we have U.S. impeachment procedures going on, trial going on in the United States, so that affects the U.S. dollar. We have Brexit coming up on January 31st. That impacts the euro, the pound, the Swiss, the U.S. dollar. Then we have the China-U.S. trade talks, deal phase 1 to be signed in 2 days. We have to get there. Who knows what happens, but right now it seems to be on track. So these are all major events that are fundamentally in the marketplace that are tearing at both bulls and bears. There's a lot of indecision, and because the numbers are pretty stable, everything globally, it's hard to pan away from those things and try and get a grip on figuring out where the market's going to go, especially if it's not going anywhere. So that's something you want to really, really be mindful of. And if you want to look at also the euro pound currency cross, this gives you a little idea about what's going on. See, here's euro strength. So the euro is finally breaking out towards the upside here, getting a little bit of a move against the pound. That's probably because we now have some sort of semblance, and this all has started in the middle of December, of what's going on. So euro strength is starting to rear its head. The question is, how will it start to react over the rest of the month and into the rest of the first quarter? Because the euro, as you can see, has been, look at how tight it's traded versus the pound mostly for the past couple months, except for this one little dip in December. So we're going to see, are we going to break out of this stuff? I don't know. Just remember, folks, this is your one key indicator right now. The dollar index is a overall bear. It's in a corrective move higher, and unless it takes out the last lower move high over here at 97.82, the dollar index should be under pressure, and most of your major currency crosses should start to get a lift, meaning become a bull. So we will have these different trades to look out for right now. We do see the euro US dollar as being one of the best, but like I said, you're not looking for much room. So just be mindful of your expectations. Don't expect any big blow-off trends to emerge or anything like that. So with that being said, I'm Teddy Keckstedt from Forex Trading Unlocked. Please like, follow, and share us anywhere you can. And if you want to know when these videos are coming out, subscribe to our YouTube channel, and then you'll be notified when they come out live. So you have a good trading day, and we will see what happens when the markets close today and see if we can get a bearing on what's going to happen moving into these other trading numbers.